so many shocks hit the German economy, we are still only stagnating. That can be also seen as a positive thing. We will see in the next half year, next quarter, how the tariffs and tariff policies are actually kicking in the German economy.
The German economy grew again slightly in the last quarter. With a new government about to sweep into office, will they be able to keep the momentum going? We're joined now by Geraldine Dany-Knedlick. She's the head of forecasting and economic policy at the German Institute for Economic Research. Thank you very much for joining us. Let's explain that GDP figure, though, because the economy has returned to growth, but it's still down 0.2% once again compared to this time last year. That's the latest figure, at least. It's a kind of a mixed picture. How would you describe the state of the German economy overall?
Well, the state of the German economy is actually unchanged, which can be interpreted as a positive news because we know that a lot of things have happened since last autumn. The old coalition broke up. We had new elections coming in spring. We had Donald Trump being the next current president for the United States, and all of his announcement and already all of his policies, particularly with respect to security and defense, but also with respect to, of course, trade policies. So overall, I would say it's more or less a stagnation of the German economy that continues, but that is actually good news, given all of the factors that were happening during or in between the years.
So it could be worse, I guess, is the answer. And it's apropos of the topic that we're doing here, because we had some viewer feedback the last time that we covered the German economy saying that we're always doing the German economy down. And now, aside from the fact that there are, of course, genuine challenges for the German economy, which we've covered in many other videos, where do we see some potential bright spots?
I mean, one potential bright spot would be the announcement of the new coalition on public spending, in particular the special fund for infrastructure, but also the exclusion of defense spending above 1% of GDP from the debt brake in Germany. If it's done right, but if you can see, or if you look at recent surveys of firms, but also households, it seems that people and markets are receiving the signal as being a positive signal. So as the new government trying to improve infrastructure and the situation of the German economy in the long run. So that can be a good thing if it is done in a correct way and if also structural reforms will follow. But that can be a potential bright side for the German economy, of course.
Okay, and we're expecting that government to take office very soon in the next few days. Just to pick up on that, where should the government concentrate its spending to have a lasting impact on growth? Because you can imagine theoretically the money goes to some German companies that build a bridge, but are those companies going to use the profits that they've made in order to invest in their own AI and digitalization and automation to improve their own productivity? If they do, then productivity increases. That will benefit the German economy long term. If they don't, you have a bridge, but do you have a lasting impact? How do we work this out for the entire economy?
Yeah, I think one thing is, of course, digitalization, as you said. But on the other hand, there's also a lot of hardwired infrastructure in Germany that needs to be kept at a certain level. And of course, in terms of growth, we will see the public investment having an impact on the economy from next year onwards, and then it will develop and accelerate in the years after. In terms of productivity, I think the effect is rather small, but there is an effect. And that can also be seen from defense spending, although the fiscal or the productivity boost of defense spending is, if you look at the empirical literature, rather small, but there is one. Of course, this is positive news, but at the same time, the German economy is still in a structural change. So it would be good, and that's what I meant with structural reforms, to think on how can we improve the German economy as being an economy where people want to invest, where productivity is high, and where firms can research and be where productive firms are actually located. And that is not so straightforward. Also, there's not a lot on concrete measures in the new coalition contract. So it would be very good if the new coalition would address these issues. One thing would be to put more effort in digitalization and also to rethink, for example, data and data security strategies, as this can prevent, for example, firms that are involved into AI and so on and so forth.
All right, and looking briefly to this new government a bit more kind of specifically, the new finance minister Lars Klingbeil of the Socialist SPD, the new economy minister Katharina Reiche of the Conservative CDU. What are the early indications that you get about these particular picks for the direction of Germany's economy?
I think it is the signals in general are good because there are positive bits and bobs that can be found that are in the coalition contract in terms of securing a high-level infrastructure, particularly from, I think that was influenced by the CDU, as I can read, for example, user-financed infrastructure. So restructuring from government-financed infrastructure in terms of traffic towards more user-financed infrastructure. There's no concrete plan on that, but at least it's mentioned and they are aware of the fact that those constructions, those structural reforms are actually necessary in order to maintain a high level of infrastructure. That would be one example where I can see that the new coalition has actually understood their task. However, one thing is what you find in a new coalition contract. Another thing is what passes parliament and what is actually be done. So hopefully a lot of these kind of measures are also implemented in the next couple of years.
And so are you confident that all of this government spending, debt finance spending, deficit spending, will have a knock-on effect in private investment as well, seeking to kind of piggyback this growth? Do you think there will be that positive knock-on effect?
So in general, the private effects will be rather limited for example, for defense spending, of course, there can be some spillover effects to other industries. There will be, but in general, these should be rather small. So we don't expect that much of a boost coming from, for example, defense spending or this infrastructure fund on private investment. So it's not a game changer for the structural changes in Germany that are going on, thinking of the automotive industry, thinking of the manufacturing sector that has been very weak. We don't expect that suddenly, because of infrastructure funds and higher defense spending, manufacturing in Germany will boost in the next couple of years. But there will be definitely positive effects of that, and that will partially compensate the losses from structural change, for example, due to higher competition of China, because still the automotive industry cannot only produce cars and other automotives for the private sector, but also if you think on defense, there's also automotive material needed, and these losses from competitiveness, from lower external demand, can be partially offset by public spending, but that doesn't boost particularly productivity. So that's a temporary effect, of course.
Okay, and talking about another aspect of investment, the DAX, Germany's key stock index, has bounced back, trading once again near all-time highs. What are investors seeing in Germany? What potential are they seeing?
Yeah, I think they see the potential that higher infrastructure and also higher defense spending stabilizes the German economy. And I think also an important part of that is that we also might see that this compensates possible insecurities and losses coming from the tariff policies of the US. I guess that, influences the expectation of investors. Again, the latest figures on the German economy are not as bad. So inflation is still low. GDP 0.2 is a flash estimate. It's still pretty good given all the political things that were going on and announced. But essentially, we will see in the next half year, next quarter, how the tariffs and tariff policies are actually kicking in the German economy. So I think it's a wait and see what's going to be next. And hopefully things will resolve or calm down. But certainly there will still be uncertainty being high due to external policies or policies done by the US administration. And if uncertainty is high, then that, of course, influences investment, private investment, because firms need to be clear on what are the economic conditions of the future in order to plan their investments. At the same time, consumption is influenced by uncertainty, economic uncertainty, maybe not directly, but you have to remember that in Germany, there are a lot of news coming from our manufacturing sector has a problem and so on and so forth. So people fear that they're going to lose jobs. So far, the labor market in Germany has been very resistant. If we can keep track on that and secure households a little bit more on the strength of the German economy, then that would definitely limit the precautionary savings of the households. And still, I mean, we should not forget, so many shocks hit the German economy. We are still only stagnating. I mean, you can also put this to the positive side. Although we were hit by the energy crisis very hard, although we face massive structural changes going on, lowering structural long-term lowering of external demand, higher competitiveness, we are only stagnating. That can be also seen as a positive thing, and also as an opportunity for the German economy to restructure as it has done in the past.
Okay, and you mentioned that in the current quarter's growth results, when we see those, that will include the very start of this tariff impact. But where can Germany look to strengthen its existing trade partnerships to shore up its exports?
Yeah, I think that's a very good point, because we should not forget, the main trading partner for Germany are the neighboring economies in the euro area. And that makes up more than 50% of the trade in Germany. That's one thing. Another thing is, of course, the trade with China. But we saw that is, the opportunities for altering our exports to China are not that high, because we've seen that in the last couple of years, or in the last 5 years, actually, the share of German exports in goods to China declined, and we compensated that by higher altered exports to the US. So if tariffs hit now, this compensation basically goes away. So we will see definitely lower trade export levels in Germany, but still, if you want to reinforce German trade, then we should concentrate on our direct neighbors. And of course, other trading partners, like, for example, Japan, or other advanced economies, Canada, and so on and so forth. I think that is very important to still diversify trade and not concentrate on one concrete partner. But there are definitely other very interesting trade partners for the German economy.
We talk a lot about manufacturing in the German economy, but 70% of GDP is actually made up of services in Germany. So is the outlook for services faring any better than manufacturing and exports of physical goods?
Yes. So what we have to say with respect to services is that, of course, there's a much higher share of services for value added in Germany. However, some services are related to manufacturing. These are manufacturing near services. And then there are other services, which is usually understood when you hear the word services, that is consumption, closer to consumption. And what we can see is that, of course, services that are close to the manufacturing sector are also struggling. But as you said correctly, the outlook for services in general, and particularly consumption services close to consumption, they have slightly better outlook in the near future. And I mean, in general, if you look around the world. That's the usual development, how economies develop from being very centered to service centers economies. And the German economy is, let's say, in a way specific, that we as a very advanced economy still having such a large part of our value added coming from the manufacturing sector. So I think, yes, services in Germany will definitely be part of our economic strength in the future. And of course, the outlook is best, but we have to also make sure that the outlook for services stay good, improving our infrastructure and Germany as a location for doing service businesses.
Okay, well, it looks like there are challenges ahead, but don't let anyone tell you that the German economy is down and out for the count. Geraldine Dany-Knedlick, thank you very much for joining us. That was fantastic.